I think that what you should ask for from the agencies that you're talking to is full transparency. I mean, if the agency has been in business for a long time, then they should be able to know, there may be outlier cases, but they know because they've done this now with many surrogates. Okay, so what does it typically cost? Or even, what's the average maximum cost for travel, for lost wages? But they're going to go to a local IVF center for all of their monitoring. And like in our case, we actually pay those bills for them. So all that should be lumped in together in terms of that surrogacy expense account, and they'll know because they'll be able to look back at the last 20, 30 surrogates and say, this is what all those expenses were. And even if on the internet it says to be determined, ask for that amount. We roll it right into the budget because we found that we'd much rather build it into our cost structure now than be billing parents like upon delivery and saying there's actually more. But at least get that information so that you're, first of all, know and can budget. And if you're trying to compare, you can do apples and apples. With respect to the unknown, bed rest is obviously the big one, or complications, lost wages. And so one of the things you need to do is be honest with your agency. I mean, if you're right up at where your budget is, you need to tell them, because there's going to be a big difference as to what your exposure is going to be if your surrogate has low or moderate wages or has a very generous short-term disability policy. If it's not on the new client questionnaire that you get, like we put it right there, then give that information, and that should be an important part of the matching process, because you don't want to lie awake worrying that if she does get put on bed rest, all of a sudden you're going to be in the hole. Yeah, there are caps, but honestly, most gestational surrogate lawyers that I know will put in something that says if she's put on extended bed rest, that's going to have to be renegotiated, because their view is that she shouldn't go into the hole, if you think about it. So honestly, that's what we now just put into our contracts, because in most cases we're trying to come up with a number that's going to cover it. But if she's put on bed rest by the doctor, you want her to have incentive to stay on bed rest and not get up and go to work because she otherwise can't afford to do that. It's to protect your baby. So, but if she has a good short-term disability, or she's not working, or she's got very low wages, and so or she's already got her child care covered, you've already thought that one through. So you need to let your agency know that up front, and even if it takes a little bit extra time to make that right match for you, at least you won't lie awake worrying at night. So I think that experience counts, and certainly like everybody up here has had the experience that they should be able to look back. I mean, those expenses are kept to the penny.
When it comes to surrogacy insurance, you're really talking about two things. One is obviously the baby or babies to be born, and second is the surrogate. I would advise everyone that review your policies as well. Some people don't think about, they just think I have insurance. The second the baby is born, I add it to my plan and there's coverage. As you've probably seen the last couple of years, the networks have shrunk. The difference between in-network and out-of-network costs have gone big, very different. And if you have an HMO versus a PPO, you may not have coverage outside of your home state. So for those of you in New York, you can't use a compensated surrogate here. You're going to be in a different state. So really review your insurance. If you're working with a lawyer or an agency, ask them to review it as well, just to make sure you have proper cover for the children. Surrogate, similarly, if you're, again, working with a professional, you'll want that professional to review the policy for you, because you want to make sure that she has maternity care, and you want to make sure that she has no exclusions for surrogacy. Particularly surrogacy exclusions that will impact your journey, because what you will see in a lot of different insurance contracts is there may be exclusions that mention surrogacy, but when an attorney or an insurance specialist reviews that plan, they may say, yeah, it does say surrogacy, but it means the surrogate using a surrogate, not being one herself. So you want to make sure there is a professional reviewing that plan to make sure there is proper coverage. The ACA plans, obviously the numbers are going up this year a little. We've seen the reports, obviously, that were big a couple weeks ago, that on average across the country, premiums going up about 22%, different in different states, whether or not there's multiple plans available. And then the deductibles are anywhere ranging, I'd say, from $5,000 to $7,000 for the surrogate. So when you're planning and you think you may be able to get a ACA, let me take a step back. When I say ACA plan, I don't mean a on-exchange government subsidized plan. We all kind of use it as a misnomer in this field, but an ACA plan means just a private health insurance plan that's compliant with the Affordable Care Act or compliant with Obamacare, and that's what you would put in place for your surrogate if she doesn't have her own proper insurance. So those plans are available in this wonderful country we live in from November 15th to February 1st, so you do have a tight window to put them in place. There are insurance companies that offer bridges if you miss that time period and you want to have a bridge insurance till next year and start your process. But I would say, and people can talk about their own opinions, but on average, you see anywhere from as low as maybe $300 a month for premiums, high, maybe $600 or so. So you're looking minimum, expect to pay about 12 months of that premium. And then, like I said, for deductibles, low end maybe, I've seen them as low as $1,000, but as high as $6,000 to $7,000. And again, you expect if she's buying that as her plan for this journey or your surrogacy journey, you'll expend that whole deductible. The one piece of advice I would give too is think about it in terms of a calendar year and not your surrogacy journey. And what I mean by that is you may get matched in March and you may buy an ACA plan. She may not have a transfer till June. So you're going to pay 3 to 4 months of a premium before you even have a transfer. You're going to have 3 to 6 months of a pregnancy, and then you're going to get to next year's calendar year, and that deductible re-ups again. So you may expend a full deductible in year one and have to expend it again. So much like Diane said, whatever estimate you come up with, tack on 10 to 20% just to be safe, that you're not pinching money at the end, that you're planning well in advance of what it could be. Outside of those plans, until 2 years ago, until these plans came into place, almost everyone that was working with a surrogate who didn't have insurance used what was called a Lloyd's plan. There was 2 or 3 companies that offered surrogacy-based maternity insurance. It's actually contractual indemnification insurance. And why these plans went away with the ACA is that they're more like catastrophic insurance plans in that you pay a pretty substantial premium and you're most likely going to pay the full cost of the pregnancy, but the plans kick in if you do have major complications. So they had, and the plans are much better if you're having a singleton versus twins because the deductible is much lower when you're having a singleton versus twins. Those plans are still available. They didn't go away, but I would say they just almost went away completely over the last couple of years just because these other insurances were available in every state.
And just to clarify, that's because the Affordable Care Act included provisions that would cover everybody against catastrophic.
Correct, because you were just buying a private health insurance plan for the surrogate like any other insurance, where you'd have
previously that was not the case.
Correct.
Can I add?
So, go ahead.
And something to be thoughtful about with this is that, the surrogate's insurance, and through that, those medical bills are going to be in her name. And so she's getting those bills and they're in her name. And if you haven't budgeted that correctly, I do know women who have gotten to that point and their IPs are there and they're like, oh, shoot, we're out. And then there you are stuck with a medical bill from a surrogacy. So for my behalf and the surrogate's behalf, I would be really thoughtful about making sure that you have that because you don't want to put her in that position of having a medical bill in her name that you then can't pay.
And I would jump on that. Hospitals have become vicious in collections. They're 100 times worse than any other industry in the world. It's like you hit day 31 and they're sending almost fake collection notices from the hospital that they then back off and say it's not a collection notice. But both of you can. It's gotten worse and worse and worse. Even things that were paid, someone in billing may miss it and they send your surrogate this warning and it hurts the relationship. Right.
No, and they're slow. So your agency's going to keep your money for a certain amount of time, a certain number of months, so that the surrogate is protected, so that those bills that trickle in after the delivery can get paid if they're
So from your budgeting standpoint, realize that is something, cash flow standpoint, realize that that's going to happen.
And it's supposed to be a win-win situation. It's supposed to cover you so that you have enough money set aside to carry you through your surrogacy journey. And then you can kind of sit back and enjoy the process and not worry about, am I going to need more money? And it's supposed to protect the surrogate too, so she can sit back and know there's enough money set aside to pay her. So, we just want you all to have the kind of the view that if we ask for a lot of money, or if the escrow company needs a lot of money in the escrow account, it's not to hurt you or make it more difficult. It's to help you to get through the process with less worry. And Diane mentioned about the slowness of medical billing. The escrow company might say, we want to keep the money, or the contract says to keep the money in the escrow account, whatever's left over, for 6 months. And that sounds like a long time, but it's not when you think that sometimes bills come through 3, 4, 5 months after the procedure is done, because they submit it to insurance, the insurance pays, and then there's a leftover. So that all takes months-long process. So again, try to look at it as if it's a way of helping you and protecting you, not a way of making it more difficult for you.